basic story there for Solar is effectively the largest U.S. module manufacturer, but they're tiny relative to some of the large volume suppliers in China, Jinko Solar, for example. First Solar has less than 3% market share globally, but they are punching way above their weight in terms of profit generation. So they've got small market share, but they are the most profitable player. We think they've got some continued upside to consensus.
This sizable C plant is expected to cost roughly 38 billion pounds in 2024 prices, which means roughly translates to 14 billion per gigawatt, or 14 million per megawatt, which makes it the most expensive reactor ever built.
So it's very likely that we're in an oversupplied market, which means, I think, continued pressure on oil prices. So I think oil prices will be anchored in the 60s at the moment. I mean, they've been anchored in the high 60s. I would argue that it's more likely that they are anchored more in the mid 60s towards the end of the year.
I think for land drilling, things are certainly trending lower, particularly in North America. And, we've seen decreases in the rig count with cuts on the oil side offsetting increases on the gas side for the last 3 weeks. And so we've seen a lowering of expectations in general for U.S. land drilling in the second half of this year.
I think the more interesting bit from Aramco earnings has been that their free cash flow generation, their organic cash flow generation, has not been able to cover their dividend payments for a while now. So in the second quarter, their free cash flow was around $15 billion, and their total dividend payment for the quarter was around $21 billion, which means they need to keep borrowing or use up their cash reserves to keep paying these dividends, which are obviously very important for the kingdom.